two types of investor: those who can't time the market and those who know they can't time the market. Hello, I'm Mark Homer, co-founder of Progressive Property. We're currently on site on one of my developments, 120,000 square foot, was a commercial building, and we're converting it into residential. In this video, I'm going to reveal my honest thoughts about Bitcoin and GameStop. So if you'd like to see more videos like I'm doing today, subscribe to this channel below. In the past few weeks, the world has gone crazy. Everyone's going on about Bitcoin and GameStop. So with GameStop, you've got a series of investors who have been grouped together by the internet on platforms such as Reddit, who have decided to go and buy stocks like GameStop, and now they're moving into silver and BlackBerry, businesses that generally don't have a good chance of turnaround and have a dying business model. Where you may have lots of hedge funds shorting them, which means that they have sold shares that they don't own, which they then need to buy later in order to close their positions out in the view of making a lot of money. GameStop investors have been buying those shares in order to make money and to take it off the hedge funds. So it's the big David and Goliath, Robin Hood type scenario where the little man, you and I, makes money from the establishment, the institutions. Since I've been investing, I haven't seen anything quite like this. Clearly the internet has changed things in that it's managing to group people together. I mean, we used to be on forums, I don't know, even 20 years ago. Platforms like Reddit have made this even easier, and it's created an increased coordinated effort from smaller investors, maybe not particularly sophisticated, who are investing in things on a very, very short-term basis. They're effectively day trading. Something that really perplexed me was that there were people living on forums like this that could be organized in this way. I didn't realize that Reddit would have this power, but clearly this is a new phenomenon and probably something that the big institutions, the hedge funds, private equity, they need to watch out for this. Clearly there's loads of hype and some people have made a lot of money, but this is a zero-sum game. So when someone makes a lot of money, there is an precisely equivalent loss made by somebody else. There are going to be winners and there are going to be losers. And there are going to be people that lose their shirt, lose almost everything because they put such a lot of money into these investments, perhaps naively. And the million-dollar question, am I investing in GameStop? No, I'm not. It's not really something that I believe in. I think when you buy shares, you should be prepared to own them for the long term, at least 5 or 10 years. My strategy would be to buy into something that I think is really, really good, fundamentally a good company, so that it may take a while for it to turn around and come right, but I have high confidence that the day will come where it comes right and the market will then recognize the value within that business. I don't feel like GameStop, BlackBerry, fit into that category. Maybe silver, maybe it does. I haven't looked very much at silver in recent times, but maybe that is a better long-term investment. Lots of people are very excited by Bitcoin. One of my business partners bought in, I think it was about $300 per Bitcoin. Clearly he's done incredibly well. I think when I was getting involved, it was sort of 5,000, 6,000. I've got, some. I've not got much money in Bitcoin. Maybe I've made 600 or 700%, but I wouldn't invest loads of my net worth into Bitcoin because, it's clearly very high risk, huge gyrations. The technology behind Bitcoin we hear is very, very secure, but, lots of encrypted systems, even going back to the Second World War, when you see the Enigma that was hacked and effectively Bletchley Park managed to decipher it. Lots of things have happened since. Edward Snowden, Julian Assange, the CIA, the US government have managed to crack lots of forms of encryption, have been listening in and watching us. So it's not beyond the realms of imagination that Bitcoin could somehow get hacked. I don't know. I don't understand that technology deeply enough. Clearly they're always mining more. I know there's only a certain amount that can be mined, and there's the halving that happens. So that should increase the value, and it seems to have been going very well. I suppose other risks are governments feel like it's got too big and start to regulate it. I don't know. whether that's still possible. Lots of people say it's got too big now, they can't control it. But you know, I used to think things like that about maybe sort of tax and buy-to-let and things like that. I think governments can do all sorts of things when they really want to. It's all about this sort of political will and imperative. So, you know, there are clearly risks there, but that's why lots of the investors who have bought into it have made such a lot of money. So again, would I put, my whole balance sheet, into Bitcoin? No, absolutely not. I know, some of the funds and institutions have started investing in it. I find it more interesting than GameStop, but I won't be doing a massive portion of my net worth in it. There's clearly no income stream, which is a challenge, a bit like gold. But there's also no intrinsic value, which is, also not great. There is with gold and silver. It can be made into jewellery and into lots of industrial processes use gold especially. It's a different sort of investment and something that I would put play money into. So Bitcoin is exciting. I've got a small amount in an ETF, and I've also got some on a token which my business partner bought for me as a wedding present, which I just sort of keep in my safe. Is it going to go up loads more? He thinks it's going up 10 times. Some other people like Warren Buffett think it's going down to 0. Yesterday I interviewed Stephen Lansdown, who is a multi-billionaire, started Hargreaves Lansdown in 1981. He says he doesn't understand it. So doesn't invest in it. I have a superficial understanding of it, so I don't put much money in it at all. And I think most of the people that are investing in it also have a very superficial understanding of it. Is it going to go up? Is it going to go down? I've no idea whatsoever. But in the short term, I could say the same about any share or even the property market. I think, again, this is people wanting to time a market is not timeable. You cannot predict. There is not an individual on the planet who can predict the short-term movements of this stuff. It may go up, it may go down. Asking whether GameStop, or indeed the property market, or anything else is going to go up or down in the short term is not what sophisticated, often, not what serious people would ask. What you should be asking is, what is going to go up over the medium to long term? In the medium to long term, good, clever investors can make good, informed predictions. In the short term, none of them really know the answer. Lots of people will sort of surmise, but to even ask the question implies that you expect that the person you're asking can offer you an answer of value and something that is going to help you. They can't. I can't. Nobody can. You cannot time this stuff in the short term. And I've sort of said it a few times, I'll say it again. There are really only two types of investor. Those who can't time the market and those who know they can't time the market. 2006, 2007, there were so many people out there borrowing money, investing in things that they didn't understand. Maybe they were buying equities and the markets were going crazy. That old adage, when your shoe shine boy is giving you share tips, you know that the market is too high and it's about to crash. There are some similarities now with the pandemic, where there are lots of small investors who are day trading. They've come into the market very recently, and they're effectively speculating. Residential property has been going up a hell of a lot. And clearly there's lots of inflation coming through the system. We're seeing it with materials, with labour. The supply side is not picked up. There are lots of factories being shut, lots of issues with containers stuck in Europe. So, the cost of transporting goods from Asia to Europe has gone up maybe threefold. So these are supply side issues which are going to create inflation. And the types of people that we've been talking about and what they're actually investing in is not a great indication as to how things are likely to turn out. Obviously, as we go into this year, as I said, a lot of the government support, the furlough, the grants, all that stuff is going to come to an end, and there is going to be a day of truth. So I just think we need to be mindful of that. Yes, use a little bit of play money on this stuff, but I think you're probably in the long term going to do a lot better by investing in fundamentally good companies that have a good long-term outlook that are sensibly valued. I know this is going to interest lots of you guys, so why don't you comment below and tell me what you think. So that's been Mark Homer. Make sure you subscribe. Over and out.